Let's talk more about the sector in detail. Remember last week Accenture came out with not just a good set of numbers, but the growth in the guidance or the outlook on the guidance front indicated that the demand continues to be very strong. This was, I think, the highest growth in order book that Accenture has seen in the last 10 quarters. So let's find out what implications this would have on the Indian IT industry. We'll talk to one veteran, Ganesh Natarajan, the Vice Chairman and MD of Zensar Technologies, joins us now with an outlook on the sector and on their company specifically as well. Ganesh, hi, thanks so much for joining us. That's the first question, straight up. How does the demand scenario really look in both in terms of the deal pipeline and client budgets in CY 11? Is there any kind of significant improvement that you're witnessing?
I really think so, because I think the demand scenario looks very, very positive. I do expect that the sector will grow in India at about 18% this year, and definitely 20% next year is on the cards. Two positive drivers. One, of course, is that a lot of the pent-up demand for offshore outsourcing is being released at this point of time. Second is we are seeing prices hardening, so new customers are willing to talk about new pricing. So I think both these are positive signals. I certainly expect that the sector will grow substantially better next year, and even so this year.
Mr. Natarajan, morning. You have followed quite a bit of inorganic growth strategy of late. Is there any more acquisition that is on the anvil or you're planning?
No, not really. We are right now in the middle of a 100-day integration plan, which finishes on April 8th. But we are very excited because both in our core businesses we are seeing good demand, and right now we are setting out on an agenda to double our revenues in 3 years, which means from 950 crores, which was FY10 revenues, we intend to look at 1900 crores plus by FY13. And I think both through organic as well as inorganic, we are well on track to make that happen.
You just spoke about the pricing environment. What kind of an upward bias are you seeing on pricing, sir? And in terms of the stability, you think the pricing structure has stabilized compared to what it was about 4-5 quarters back?
See, I certainly think so. Obviously, there are concern areas like the Middle East, like Japan, and even in Africa, which is a big market for us, because it is becoming difficult, and the visa regime in South Africa is becoming quite difficult. But if you look at the traditional markets, largely US and UK, you are finding that existing customers are stabilizing, and I think, as I said, new deals are coming in at 4 to 5% higher pricing. It's not going to compensate for the fact that input costs are going up, but clearly it's a better signal and a better trend compared to the last couple of years.
Mr. Natarajan, what about employee costs? Because that's something where we have seen all the companies facing pressure. There was even reports that a company gave 200% bonus of the basic salary, of course, to its employees. Would that dent into margins quite significantly for a company like Zensar?
See, I think Cognizant is a fantastic company. A 40% growth last year is an amazing performance. So I think their employees surely deserve a 200% increase. But I don't think that's going to be a trend. I personally think that, you will see probably 9 to 10% average salary increases this year. Company like Zensar will go the full range, which we did even last year. It will be all the way from 5 to 6% to 22% for high performance. But I think we have to factor that in. So I think employee costs will go up. And everybody will factor that in by looking at managed services where we can use larger numbers of younger people. That's one. And the second, of course, is IP. We are aggressively focusing on R&D, building intellectual property, so that every incremental dollar of revenue is not based on manpower addition. But that is continuing to be a challenge. And I think as successful companies grow, to maintain profitability, we will have to focus on non-linear revenue growth.
The movement in the rupee in the past couple of months has been giving heartache to a lot of IT guys like yourself. What is the outlook in terms of the rupee, given the fact that it may just stay at this 45 level for a while? How much of a pressure does that really point out to be? And for companies like yourself, what would the strategy be?
See, my expectation is the rupee will still stay around the 45 mark for the next year or so, because obviously we have our own pressures in India. But in the longer term, I think obviously all of us will have to be prepared for something like, if you look at a 3-year strategy, it will be in the region of maybe 40 to 45, 42 to the dollar. And yes, this quarter we have had some negative surprises in terms of other currencies. But I think that next year will be fairly stable. I don't see any substantial shifts either way. So, and that's really what we've factored into our budgets and our profit patterns going forward.
Mr. Natarajan, you have an office in Japan as well, so would like to ask one question. Are the operations stable over there, and going forward with the kind of unfortunate events that we had over there, will that impact your guidance in any ways? I know it forms a small portion to your turnover, but still, would that impact your guidance?
No, not at all, because the project leads that we had in Japan have come back temporarily, and they will, I think, expect to go back by probably middle of April. It has delayed implementation of a couple of projects because obviously customer user acceptance has been delayed to a certain extent. But I am fascinated by Japan. I think the way the country has come back on its feet and the almost near normal situation that we are seeing in Tokyo is absolutely amazing. So given the resilience of that country, I don't see any big impact in the medium term on the industry. And certainly, obviously they are going through tough economic times, but this one thing is not going to have any impact, in my opinion, on any company's fortunes in the next year.
Just one final word then on the acquisitions and the kind of impact it would have on the balance sheets. There's been a lot of excitement post that, but of course those acquisitions would lead to depressed margins for a while. I think the next 2 to 3 quarters is what you said the last time. How much would your margins suffer because of your acquisitions, and eventually what kind of a fillip are you expecting to see in revenues brought about from these two?
See, as I said, I don't want to comment on the current quarter because we are too close to the end of the quarter. But certainly if you look at a 2-year horizon, which is what I was talking about, if you look at FY10, we had, as I said, 950 crores plus revenue, and we had a 13% PAT. Our goal is, obviously, this year and next year will be depressed because Akebia, being an on-site company, has a lower PAT. But we do expect, if you look at our outlook, that by FY13, crossing 1900 crores, which is the doubling as I mentioned in 3 years, and retaining 10% and above PAT is our goal. So it will be lower in the next year because obviously we are integrating, but I think we are very confident that the Akebia acquisition will drive significant revenues in what is one of the fastest growing areas of infrastructure management, give us a dual shore strategy, and help us to drive much more business and more profitable business.
If you could just give us an indication, you spoke about the pickup in discretionary spend for companies like yourself. Where geographically are you seeing that increase, and even overall for the industry, what is the general sense in terms of geography where the discretionary spend is picking up?
See, most wise companies have diversified their geographical basket. So for instance, if you look at our own revenues, clearly 22% come from Asia and Africa, and we'll continue to focus on emerging markets. At the same time, nobody can ignore the US, and the fact that there is positive signs emerging out of the US is good news. Europe, I think, will be dull for the next year or so. Japan will be, probably at best flat. So I think our focus is really going to be Asia, Africa, large focus on the domestic market, and also making sure that our existing customers and new customer acquisition in the US is substantial. So our entire alignment towards making that happen.
Okay, Mr. Natarajan, thanks a lot for joining us.